afternoon, everyone, and happy Friday. It's Alyssa Coram here with Ed Carson. And on today's show, we're going to go a little more in depth with the market technicals, take a look at what happened this week. It was definitely a bit of a wild week, so a lot to discuss. And then we're also going to take a look at two chip stocks with interesting action. We have Broadcom as well as Qualcomm. But Ed, first, let's take a look at the major indexes. We had the Nasdaq gaining about 2.3% for the day, so a strong gain to close off the week.
Yes, it was. It was a wild week, and yeah, let me still my screen, of course, went off kilt here again. But
not a problem. While you figure that out, I will do a little bit of talking.
Do a little bit of talking.
So the S&P 500, meanwhile, on Friday closed up 1.6%, and we had the Dow up about 1.35%. But for the Nasdaq, we're still below that 50-day line, and we've kind of been now trading in a sideways range here. So I wouldn't necessarily say that with today's strong gain that necessarily means that we've found a bottom yet. We may have, but it's still not for sure.
Yeah, and we're looking at the Nasdaq now, and on Monday the Nasdaq hit a low, and that it can't bounce back a little bit, but it hit a low intraday there, bounced back on Tuesday, then on Wednesday fell really hard. And on that day, we decided to IBD declared a correction. I mean, we don't do what some others folks and just say 10% is a correction. We look at the major indexes and where they are and how the leading stocks are. And it just decided this is just not good action. We just need to make sure you're mostly on the sidelines for sure. On Thursday, we almost undercut. We came within 1 point of undercutting Monday's low, and that's important because that actually makes this what we call a pink rally day, because on MarketSmith charts, this would be a pink day. It was down, but Monday was way up in the range. So we consider that still legitimate for a rally day. So when you get 4 days into a rally, that makes this 1, 2, 3, 4. That makes when you're 4 days into a rally, you can have what we call a follow-through day to confirm a new uptrend. Not every follow-through day works, but you basically need to have a follow-through day for a rally to work. And that basically you need to have one of the indexes go up at least 1.25%, but on higher volume than the prior day. And that's what we didn't have today. Very nice action.
Right. That's the key, the volume. We were missing the volume. So that's why today technically did not qualify as a follow-through day.
Yeah, and that would have been on the Nasdaq because the S&P and the Dow undercut their lows on Thursday, so it's only day 2 for those indexes. But it's really it's probably for the best that we didn't get that follow-through day, because as you're saying, we're still below the 50-day line. We're still sort of in this lower area. If we had a follow-through day early next week, and presumably we didn't plunge in the meantime, you could see us getting back over 11,000, which is essentially where the 50-day line is, and then you'd start feeling a little bit better about things. And presumably you'd also see leading stocks, which are starting to show, showing some tantalizing signs, maybe even more powerful rebounds, building those bases. So, that's what we want to be looking for next week.
Yeah, and another thing that I would add is that the correction call, that doesn't necessarily mean we think that the market is going to go down X% more. What it means is that you need to be careful with your portfolio, and you don't want to be aggressively buying, because even though we have seen some up days in between, all of this choppiness has made it difficult for breakouts to work at the very least.
At the very least. And the problem is when you start trying to buy these early action, and if you just tiptoed in, probably didn't get burned too badly. And a few stocks work, they always do. If you always will buck the trend. But if you bought on the upswing, if you say, oh, the market's doing well, it looked really good there, well, then you immediately got hammered. Oh, it's looking good here. So chances are if you're buying in a choppy market, you're buying at the highs. So it's bad enough that the market's choppy, but you're buying it what seems like a good time, but it's ultimately the worst time in that situation. Is usually, this is why you want to clear uptrend. This was just beautiful. This is beautiful. We may not see this kind of uptrend again, but this is great, because even though there's little ups and downs, chances are you've got gains and you keep on building gains. It's just so much easier to make gains when you've got this big tailwind behind you.
That's right. So that thesis with those regression channel lines has now been broken. We're under that 50-day, we're under the 21-day. So those are really kind of the short-term levels that we would want to get back above, as you mentioned, to start feeling a little bit better about where the market's headed.
And of course, it could be, and that's why it could be a head fake, just like some of these other ones. And it was promising these last couple of days. It was really nice to see such a steady gain today. I mean, Thursday was whipsaw. So many of these days have been whipsaw. This felt steady. I mean, yeah, there was a little wobbly right at the beginning, but there was just a gradual uptrend and, closed near the highs of the day. Just everything about it felt very good. The only thing that was missing was the volume. But just to take a quick look at the weekly chart, we finally had an up week, not much of an up week, but it was nice to see something to hold your ground. And, that basically all came on Thursday and Friday. S&P and Dow, I think, still had modest losses for the week, but still just nice to see, some halt of that.
That's right. So with this big blue bar, what does that potentially give us insight into as to what we could see early next week?
Look, presumably we're going to see a test of that 50-day line. We're really coming up close there. And a lot of stocks like either Apple or Microsoft, some of those names that fell below it, either closed just above or just below those levels. So the likely thing is we're going to see that kind of test early next week. If we can get above that, whether it's through a follow through day or just because we go up some, that would be a really nice positive. But, that's going to be an important test. It's been an area where the market has struggled over the past couple of weeks. And so we'll just have to see about that. I don't know if we get a confirmed uptrend. It seems unlikely that we'd return to this regression line, essentially a channel line. This was so steep. It's not saying we can't do it, but it's just the odds of it happening are so much less to do that.
That's right. And when you rewind a couple weeks back now to one of our stock market updates that we did with Mike Webster and on IBD Live as well, I believe we looked at a precedent from 1980 and when we did see a break of this power trend like this, it was kind of similar. The market's character after that changed. So I feel like it might be pretty rare to find an instance where we just slice straight back up after the pretty quick drop that we've seen. But hey, 2020 has been a year of firsts of many things.
You certainly could. And I would just, you can sort of see the rallies last year. This was a strong rally. But just to go with that pace versus, this angle is just so hard. But I'm going to show that one other reason is that this is a monthly chart. Now we're going over to MarketSmith. And this is a monthly chart of the Nasdaq. I mean, we've looked at it. This is a long-term chart. The trend line goes back to 2010, and you can see that even with all this pullback, we're just right on that trend. I mean, we really didn't break it that whole time. We could always return to keep ascending it, but it seems more likely that we would rally at more of this pace, which would be a strong pace over time. That would be a nice ascent over time, but it's just something to keep in mind. April to September may not happen again, that or not for a while. That was a lot of fun. But
yeah, it was. But the good thing is, and we can take a look at SPY for the S&P 500, just because you touched on how it undercut the prior low on Thursday. We did see a couple of gains back to back, but at the very least, this is kind of weeding out stocks, and we're finding out who the true leaders are and allowing stocks to set up in new proper base patterns. And those could be the ones that, if and when the market does start to turn around and we're back in a confirmed uptrend, you want to be keeping an eye on the ones that have shown strong relative strength in this time.
Absolutely. And there's a lot of sectors. Obviously, look, there's nothing like a couple of nice gains to make stocks look a lot better. It can really change the mindset of everything. Here's a stock that we were talking about on IBD Live. In fact, you wanted to talk about it before the open, and then it did pretty well, even with some negative news during the middle of the day. But why did you pick this stock, and what do you make of this?
Well, the great thing about IBD Live is not only are you getting our real-time analysis during that first hour and a half of trade, but our team updates and maintains a ready list and a watch list every day, and a lot of thought goes into that. And so that's just an extra benefit for everyone on IBD Live. So what I'm trying to say is I saw Qualcomm was on our ready list. It's because before the market opened, and people have also asked us, okay, what should my daily routine be like? What should my morning routine be like? Well, one easy thing to do would be to go through that IBD Live ready list at the very least, and see what those stocks are looking like pre-market. So this one caught my eye, saw that it was up pre-market and it was finding support at the 50-day. So set to bounce off of that level today, adding to those gains. And that relative strength line as well stood out to me, hitting new highs. So that's emblematic of strength in the face of all of this pressure that we've seen broadly over the last couple of weeks, Ed.
No, that's a great point. It retook the 21-day line. You could even argue there's sort of this trend line, pretty steep, but there's a lot of things that was just in this situation, because we don't know if the market's, it's not a follow through this. So if you as we were talking about, you maybe take a little position on something like this. I mean, and maybe you wait until you build out. This is sort of like a mini double bottom. You could sort of treat this, as an area. If it gets above that, there may be forming a base. And so you could fill out a position over time. So if we reverse lower, you can size a position now off the 10-week line or the 50-day line,
Right.
and then maybe build your position up if things continue to improve, but you don't have to go a whole hog when the market is uncertain. But this was really good. There's a lot of chips are going well. This is one we haven't talked about too much, but this one is like, I was just looking through and this was acting quite well. You don't really see the correction on this chart.
Yeah, that's a good point. And also a good point to make sure you are checking in on those different time frames. Not only are we looking at the daily, weekly, and monthly charts as part of our weekly routine on these Friday shows for the market, the Nasdaq, we're looking at those different time periods. You want to be looking at the different time periods for your individual stocks as well. They all tell you a little bit of a different part of the story. So I like the look of this weekly chart as well, Ed. It did log a slight loss for the week, but well off of the lows and came almost down to that 10-week line, was able to rebound there. And before that, had seen a couple of weeks of tight action, and that relative strength line, just like Qualcomm, is looking really nice as well.
Yeah, and this one actually now it's going to be a 4 weeks tight. So that's
perfect. There you go.
That's a 4 weeks tight. So this would actually be off of that would be the buy point, and in another week it would presumably be I assume it would be a flat base. I haven't done the math, but it would be. So it's this nice action showing that kind of strength. I mean, tight patterns are always nice, but to see in this kind of volatility is a nice action. Qualcomm is benefiting from the move to 5G, including the Apple iPhone, and Broadcom as well will be benefiting from Apple iPhone, which is going to be coming out in the coming weeks. So just a couple of stocks. There's so many things. Software. There's a lot of different sectors. Definitely cast a wide net, as you were saying. Relative strength, really strong. That's a really important thing to be game planning for the coming week. Because we might be having a follow through. I mean, but we might not, so you got to game plan both ways, with
very true.
Yeah. With college football starting up, you got a game plan for offense and you got to have a game plan for defense. They're definitely two separate things. There's an offensive game plan that you might have, but you might need to put that to the side and say, well, I need to play defense if the market sells off again. So don't get locked into one mindset or the other.
Yes. Exactly. We use technicals to kind of give us an expectation of what could be, but we're not predicting anything. It's always important to stay flexible. Like you said, have that game plan. And right now, you want to be looking at those top stocks that are setting up and be ready to act if that's what the market is telling us next week.
Yeah, so I mean, it was really interesting action. It was really looking dire a couple of days ago and for yesterday morning, but we bounced back. It's tentative though, so don't get too excited either. You don't want to get too excited or too fearful. You want to try to keep a level head, and let the market tell you what to do. Not try to impose your will or your wishes on it. There's been a great year, and hopefully that can continue. We're going to keep talking about it on Monday. Yes. Well, maybe not you, because you're going to be having a little bit of time off.
Yeah,
but
I'm going to be off a little bit.
Well, you're
I'll be
never
checking in
off.
though. You never know. You never know. I might pull an Ed and
Yeah,
work on my day off.
that might not be bad. That wouldn't be bad to do that. No, we'd love to have you. And anyway, we'll be back on Monday with IBD Live. It's obviously going to be a very interesting week once again. So, that's where we're taking it from there.
Mhm. That's right. And just looking a little bit further out, we do have a lot of potentially big market moving headlines in the next couple of weeks and months, but IBD will be there to analyze it for you every step of the way. And Ed and I will have more commentary on that coming up in our October episode of Investing Strategies. So keep that on your radar. But with that, we appreciate you watching, and the team will see you on Monday.